Hello everyone and welcome to Investing Angles. In preparation for tomorrow, we noticed a couple of interesting patterns among large stocks like Amazon, Google, Meta, and Microsoft. And today I decided to record this little video explaining what we are thinking and what kind of impact the patterns might have on tomorrow. Let's discuss it. But before we start, please make sure to subscribe to our channel and support us with your likes. Let's begin with Microsoft. So what we are seeing today is the closure, the daily map. It doesn't look very bullish, even though Microsoft closed last 2 days with green candles, and potentially this could be the beginning of something bigger. At least it made an attempt to form a bottom, but so far it's not very successful. And that is why, because today Microsoft formed an 8-day frame and this big bearish engulfing candle. What we are seeing here is the 8-day frame, 3 black crows that Microsoft made in July, August, and since then it tried to recover from this impact. So far it is failing. If nothing happens tomorrow, I mean even Microsoft stays at this level plus minus a few points, it is going to record an 8 by 20 EMA bearish cross, and this would be kind of different from the previous one because it will be the second closure below the 50 weeks moving average, which is fairly rare event. And I'd like to remind that Microsoft closed months of January with a strong bearish candle, so that the red candle in February shouldn't be surprising at all. Let's have a look at the different chart. What we are seeing here is we track head and shoulders formation for Microsoft, and it looks like it's been one of the favorites for the stock. We had one in 2021 which incurred losses of 20% just to the neckline, and about the same towards the end. So here we have a slightly smaller version, like 17% to the neckline, and another 20% would be toward this ideal target between 305 and 320. Let's see if it materializes. So far the formation is not complete, but it is moving towards its closure. Speaking from the Elliott Wave perspective, Microsoft has been forming a very corrective wave starting in August. Potentially it had an impulse down and has been trying to negate it. However, it is impossible because the first wave of the bottom was corrective, and the second one, it looks like too. So this could be an ideal bearish flag WXY for wave 2 or B. And well, if Microsoft lands in the red rectangle, that's a like it path, I would say. But if it goes lower, and this would be 3, 4, and potentially 5 somewhere down there, that would be a different story. And now let's have a look at this one. So this is the most concerning chart that we were tracking for Microsoft, and we started discussing it back in October 2024 when we said that Microsoft is going to make a bearish cross, MACD cross on the monthly frame. So it did, and since then the cross is just expanding, and you can see that MACD line is moving lower, and the chances for a continued ride are increasing. So what we are seeing here is the very strong and technically similar formation of candles, and also supporting technical indicators. So if this current correction is going to be the same as in 2021, then we probably should expect at least 40% losses for Microsoft. And this I'd like to emphasize that this particular correction is somewhat similar to what Microsoft formed in year 2001. This and I'm talking about this one, when Microsoft lost almost 70% of its cap, and it took I think 17 or 18 years to recover the price to the same level that it was at the top of 2000 of the year 1999. Well, that's a very bearish and very dark perspective. However, this is what can happen in the market, and everyone should get prepared for this, at least mentally. All right, so now that's about Microsoft. A very gloomy picture. I hope nothing will materialize and candles are wrong as usual. Well, that's. Now let's take a look at our Investing Angles website. What we are offering right now here is a free reader subscription. You can check our free articles and free charts and evaluate our service. But if you want to dig deeper, you can subscribe for Ultimate Bundle with a big discount using the discount code SILVER, which will work for another 2 days. You just apply it and you will get a new price for an ultimate bundle. Now let's have a look at the other three big stocks. Let's start with Amazon. So Amazon today after hours, it lost over 5%, but it went deep, up almost 9%. So this was our chart that we shared just 2 days ago, saying, okay, this is the path for Amazon and we should expect it to drop hard. And this is exactly what happened. Just we had to wait for 2 days. And this is called ending diagonal, which we spotted right on time and shared with our subscribers. We hope you had a chance to view this video and have a look. So what we are seeing here, it's a strong bearish candle, and it is highly unlikely at this moment that Amazon will start recovering from it. It might form another, like a bigger diagonal, for example, something like this, and it might take another couple of months before it actually reaches the top. But we'll see how it works for now. So far, this candle is very strong and bearish. Let's see how it lays tomorrow. And now let's move on to Google. Google formed a fairly similar setup, also formed at a diagonal, maybe not as significant and as Amazon. However, it worked perfectly. We know that if we see a diagonal, it is expected to return to the level of origin. So far, after this big red candle, Alphabet or Google just consolidated here without showing signs of the bottom. The chances of moving lower are fairly significant, and this would be our target, considering that this was an impulsive wave that Google started in the middle of September. 1, 2, 3, 4, 5, wave 5 being a diagonal. And this is the target, 178 to 160. The most typical, however, it can go a little lower. Alright, so that's Amazon, Google. Now let's have a look at Meta. What we are seeing here is another example of an ending diagonal. However, in this case, I would say it is more severe because we are seeing here two diagonals. One is in the circle numbers like 1, 2, 3, 4, 5 potentially, and the wave 5 being a diagonal itself, 1, 2, 3, 4, 5. So this is so-called double diagonal, which usually doubles the bearish odds, and triggers a very fierce reversal. If those who remember year 2020, end of February, beginning of March, when S&P 500 formed a similar type of waves, double diagonal, and it was a very strong move down. In our case, we are expecting the price to return to 583, and this would be a loss almost of 20%. Let's see when the only question right now is when exactly it's going to trigger. Is it going to happen tomorrow or sometime next week? We don't know. So that's but we are prepared. All right, so and just to summarize, when we are seeing major stocks like Amazon, Google, Meta, and Microsoft sitting with these strong formations and a very good alignment between them, perhaps something is going to happen to the market, because these four are almost 20% of S&P 500 and even bigger of Nasdaq. Well, that's something to keep in mind and get prepared. That's all I wanted to say today. That kind of wraps up our quick presentation. Thank you very much for watching. Check our website investingangles.com. Don't forget to subscribe to our channel and share the word around. Happy trading, everyone.